Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, May 20th, 2009. Well, the market started out to the upside today and then have rolled over since then. It's been a solid rollover ever since really the 10:30 time frame. And those of you guys that follow our price pattern and timing schedule will know that that's a key time frame to watch. You have 10 o'clock, 10:30, 3:30. More than likely, you're going to move up into one of those time frames or down into one of those time frames and see a massive reversal or at least a change in direction. That's exactly what happened today, folks, as we saw a nice reversal off that 10:30 time frame. Notice the topping tail firmly in place, piercing a resistance level. And by the way, this 9260, 9270 area right up here is a key resistance level we've had on our charts going back over 2 weeks now. So that's how key it is, how well these trend lines work. I can go back and actually show you how it comes back into play. Look at how it came into play over here. You ended up right here at this pivot area, and then the highs right there. This is that same line at 9260, 9270, right in that area. You can go back. Look at how the high right there is so key. Alright, so I'm just going back to prove to you guys that these are levels that have been in the charts for days, if not weeks, if not months, if not years. Alright, that's how important they are when you go back. I can even go back further and stuff, but again, I don't want to waste too much time going back in the charts and so forth to show you. But in any case, you can see how this level was a major level of resistance. We went right up into it. Then once you see that topping tail, you have to start looking for the short play. The short play worked out beautifully here. You started to really roll over gently. And again, see, no candle was really that big on the red side. It was just consecutive red candles. Red, 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 red. Pause candle right here. Notice where you come down in this situation and you have a lot of support. Now, I talked to the chat room today in our intraday stock chat and analysis and really talked about this level today, and I said, this is your big level of the day, folks. This is the one you're going to be watching. Why? Well, because this trend line that's sloping down here in pinkish, this kind of reddish pink trend line, this one stretches back multiple days, going all the way back to the low here. If you take that line, connect it right here, and all the way up, you'll see that we couldn't break that until yesterday late in the day. And see, it hits it right here again, bounces off. Then finally yesterday you break down. But what happens today, you gap right back above it and reestablish it. Now, it's not nearly as strong as the first time, and that's really why you break it on the first attempt today. But in any case, what you can see here is when you roll over to that area, you also have the 20 moving average. 20 moving average here sloping up. The 20 weeks right here, this trend line together, that's what we refer to as a necktie of sorts. And you talk a little bit about the major support lines right in the charts. So you're really looking for this area. Now, the beauty of what happens here is not only do you get a bearish topping tail right here, which is telling you downside's coming more than likely, but you also get a bear flag in spirit of bear pattern right here coming to fruition. Now notice that. Down move right into a trend line and the 20 moving average. You get a 1-2 pause candle sideways to slightly higher. That's telling us a bearish pattern is most likely forming. At that point, what happens? The next candle opens right on that line and this collapse begins. And this is a beautiful sell candle right here. Very, very harsh sell. Now this sell-off today is being led by financials, folks. You have initially this morning, Bank of America gapped higher on the back of all these offerings. Now again, it boggles my mind how these stocks are moving up on these offerings. Bank of America over the last 2 weeks has sold 1.25 billion more shares in the company during market hours, meaning that they've basically been about 15% of the overall volume of the stock over the last 2 weeks or week. Long story short, though, just think of it from earnings. If those of you that are fundamentalists out there, think about it in terms of earnings. Now you have 1.25 billion more shares out there. That's going to dilute the actual earnings per share as you're spreading it over a wider base of individual shareholders. So again, just from that perspective, it's hard to imagine why we keep going up on these stocks like Bank of America. But one thing I can say, folks, is it probably will not last forever. Here's Bank of America today, gapping higher. Now, granted, it did trade lower yesterday after hours at first on the news, but then got a bit up in after-hours activity. This morning went even higher. Went as high as about 12.25 today, which, by the way, note this. What do we know about this, guys? Double top. I called this out in the chat room. All right, notice that double top right there. Beautiful double top. What happens? Boom. That's just showing you the technical understanding. You have to understand this stuff. If you guys can put 2 and 2 together here and understand these lines, and it's somewhat basic. You just have to get a grasp on it. You will create these scenarios where you went short right in this scenario and sold all the way off down here. And again, you could have covered anywhere all along the way. You could still hold. Obviously, you're seeing support right down here at the moving average. This is the 200 moving average right down here. Obvious support down here on the BAC chart. But again, folks, this is all stuff that you can learn in our research center at inthemoneystocks.com, where you get all the education and all the guidance that anyone could ever want. In addition, the chat room is always a great experience. Okay, going back to the spiders here. What you're seeing here, guys, that after that collapse, you see the sideways pattern again. Where is it coming? Right here at this channel. See this channel right here? How you're kind of trading in and out by each way, going back and forth right in that scenario. And that's exactly what you see right in this scenario, going sideways, and that's why you want to see. You can tell that there's support right in here because you're trading along that area. Alright, that is definitely telling you that there is some support in that area, and sure enough, as you come down, you hit it, get a little sideways action. That's another bearish flag pattern. You start to roll down, you hit the next one. Where does this come from? Well, look right here. Alright, see the pivot low right here, pivot low right here, pivot low right over here, and also the area right here, the highs area from 2 days ago, the close. Alright, run up right here. So you know this blue line, and I just put another yellow line above it. I can erase that, but I just want to accentuate it, is going to be good support. So that's your next support. You touch it, you get a bounce, and now again you're seeing some downside momentum, although this blue line is still pretty good support. If you do fail, by the way, this is gap fill right here, guys. We're right at gap fill. Gap fill is always a very, very solid support line. If you fail to hold that, though, your next support line would be at this pivot low into the close yesterday on the sell-off, which would be at $91, approximately $91 on the SPY. That's your level at this point. That's what you really want to look for on the spiders if you don't hold this area. Now, this area could hold, and we could get a bounce. We'll have to see how this market continues to trade. Right now, you are seeing a little bit of a bounce. By the way, the market, now that financials have failed today and I've come back in, what's leading this market higher right now is commodities. Oil up again. Oil has pierced above the $61 a barrel area. Continues to lift stocks like U.S. Steel. U.S. Steel was up huge earlier and continues to be having a nice day, up $1.80, but it was up much, much more. You know, all these commodity stocks are just having fantastic days, led on the back of oil and a weaker dollar. We talked about the dollar yesterday in this video, and I just want to point out again to you, and notice the bounce coming in on the spiders, guys. This is gap fill right here. Alright, right in this area is coming into gap fill. This is going to be a very, very major area. Anywhere between really this low area and this high area. Anywhere, again, between 91.25 to 91 will be a very, very solid support line on this market, okay? So just watch that level going into the afternoon. If that actually does break, you'll have a minor level right here at around 90.80, and then you ultimately could trade as low as the 200 moving average down here or wherever it is at that point in time. But going back to the dollar scenario, guys, and again, nice bounce coming in, notice how the market gapped higher and ripped higher. What's the dollar doing? Let's take a look at the dollar. UUP will use that for this chart, and what you can see here, when the market gaps higher, it's because the dollar's gapping lower. The dollar collapses the first first four candles of the day. Look at this collapse on the dollar as it got crushed. What are the spiders doing? The spiders are ripping higher. So again, it's mirroring. Now, it's had a little disconnect here, which is beautiful because the dollar has stopped falling, which has basically taken the disconnect and disconnected it here in the market between the dollar and the spiders and the market. But what you're seeing now is the financials take the lead and so forth. So you're really seeing a little change here. As long as the dollar's not falling, the market won't get a bounce. The market won't really get a bounce. That's exactly what I mean. If the dollar starts to fall again, you'll probably see a bounce coming in this market. If the dollar can still stay perfectly flat, the market will return to trading on the financials, on purely oil and the commodities and so forth. But again, if the dollar stops falling, then commodities don't go up as much or at all, or maybe they come in. Because remember, when the dollar falls, commodities obviously are getting a bid. All commodities will get a bid when the dollar is weaker because they're traded in U.S. dollars. There's a lot of little nuances here that you need to understand as a trader. It's not as simple as looking at fundamentals or pure technicals. You really have to understand what the driving force is behind this market, and right now it is the dollar and a few other things. Alright, but again, the dollar is a key component and you really got to understand it. So I do encourage you all, come join the research center. It's probably one of the best learning tools you can have. In addition, I definitely encourage the chat room, although that's more for intraday people that can pay attention for at least a few hours a day and make it worth their while to be in the chat room with us and learn from that and trade from that. Alright, have a wonderful rest of the day, folks. As always, thanks for enjoying the videos and spread the word. Take care.